Adam Levine, Chief Commercial Officer at Data4, and when we're thinking about new locations, there's always that first mover advantage, which if we can get it is great. It's been a very good. It's been good for us so far in the markets that we're in, like Paris, Milan, Madrid. But where we're not first mover, good examples like Warsaw and Frankfurt, where we moved in the second wave, or even further. Obviously there's the macroeconomic factors and what plays to the advantage. But really, we're looking for ecosystems. We're looking for fiber. We're looking for networks. We're looking for clusters, availability zones, AZs. And really, if we look at what we've done so far, and I'm obviously very European biased, and I'm glad that we've got a good spread here on the panel of other continents. But there is a lot of virtuous cycles that happen once there is a cluster, and we're seeing right now that as the economy is the brakes have been put on, we've seen that moving outside of those clusters has made it much harder to grow. So as we move forward, we'll still be looking for macroeconomic underpinning factors, but also is the digital ecosystem there to support the kind of growth that we're looking to achieve? Claude?
All right, Claude, Achcar, Actel Consulting. We're a technology advisory firm, so we do everything from fintech and cybersecurity, software, e-commerce, etc., to digital infrastructure. Within digital infrastructure, we cover one of the things we do is site location, DD. And as soon as I saw the agenda, I told Joe, please put me on this panel, because in my opinion, this is the most important topic in the industry today. And every other panel and every other keynote that you heard of this morning and that you'll hear of this afternoon is making the case. So I'll leave it at that, and we'll cover more.
Okay, thank you. And just to remind the audience, Claude doesn't mean the other panels are boring. They are also very good.
They make the case for this panel.
Thanks. Hi, I'm Ronald Phillip. I work for a company called Agility Logistics Parks. We're the largest industrial real estate developer in the Middle East and Africa. We're a $7 billion company. We have 12 million square meters of industrial land, on which we've built around 2 million square meters of grade A warehousing across multiple countries in the Middle East and across Africa. When we look at a new location or a new market to enter, we're already in Nigeria, Egypt, Cote d'Ivoire, Ghana, Mozambique. In the Middle East, we're in the UAE, Saudi Arabia, Qatar, and Kuwait. When we look at new markets to enter, several factors, as you'd imagine. The first is whether there's demand, fundamentally. The second is in which lifetime you'll be able to get a clean title for land. It can take a very long time, and even when you think you have the title, you don't know when the local tribal leader will show up and say that land belongs to him for the last 100 years, or when somebody comes and says that title is actually fake. So land title. The second is currency. Currency is not an issue in the GCC because it's pegged to the USD. In the African countries, it's a different story. And we've invested a huge amount of our own balance sheet across African countries, and we've seen wild currency swings. So I think that's something you have to take a long-term view on. So these are some of the factors. I'd say whether there's overall market demand, and we are seeing demand, and I'll come to that. The second is when we can get land, power, and title. And the third is thinking about currency.
Thank you. Phil.
Hi everyone, my name is Herman. I'm glad to see my accent for a change in my last name, not usually displayed. So I look after IFC's telecom investment program globally. We do about $2 billion a year in telecom infrastructure. IFC, for those of you that are not familiar, is the private sector arm of the World Bank Group. So we focus largely on supporting, much like any other investor, through equity, mezzanine, and senior debt, private sector, solely in emerging markets. As far as opportunities, as a multilateral, we carry a slightly different mandate. We need to make money and also support developmental impact in emerging markets. What we're seeing currently is, from an IFC perspective, significant interest in Eastern Europe. Middle East, Northern Africa, which traditionally have not been areas where multilateral money is top of mind, right? So Africa, Latin America, Southeast Asia, those are kind of our core business areas. But for instance, last year we anchored Polsat's first sustainability-linked financing bond. It was the largest issuance in Poland last year, and it was basically to support the transition from being a pure triple play operator into energy, changing their energy footprint. So they're going to biomass, green hydro, and we have a unique value add in that perspective because we also cover energy and every other economic sector. So I'll leave it at that.
No, thank you, Jim. I think on a panel like this, we often hear great stories of success, everything that went right, and what a wonderful market it is. But obviously, there's a lot to learn from failure as well and challenges. Maybe, Ronald, you hinted at a few of the issues. Maybe if you can give us a bit more colour on some of the markets you've either found extremely difficult or had to withdraw from.
So, so where do I start? Is this recorded? No, so we are an emerging markets business. We're publicly listed in Dubai and Kuwait, so we have appetite for emerging markets, but it's the question of timing. So we've looked at different countries. We've looked to enter. True story, an African country we've tried to enter twice. The first time we lined things up, and we were going in on a Sunday afternoon. That Sunday morning, the head of the army and the governor of the biggest province were assassinated. The second time we tried to go, again true story, a civil war broke out, so we had to cancel our trip. And this is a promising economy in Africa that was on the Economist front page. Another market where we bought land from the government, shortly afterwards a private company came and filed a court case against the government, not us, saying that part of that land was allocated for them. We waited 2 years for that to get resolved in the courts. And when we got our title back, the local tribal leader came and said that that land was his for the last 100 years, or through his family. So that's still in court. So we've been waiting for 3 years in that country, but we don't plan to exit because, we're not a fund, we're funds of our balance sheet. In another country, we were buying a very large chunk of land, and then we discovered that the person who was the owner wasn't the same name at the land registry. So there's a fraud at the land registry. So we're like, okay, who is this person who claims to own this piece of land? So we went to the company registry, and there's a fake company there. So there's fraud at the company registry, and there's fraud at the land registry. So we spent 2 years with 2 of the biggest law firms in that country cleaning that up. So we're still in these countries. We haven't exited, but our tenants, we're logistics real estate developers. Some of the biggest companies in the world are our tenants. In some instances, they've exited the markets because it can be harrowing for them, especially if they don't have a strong local partner in some instances. So, but those who've come in early in some of these markets and who've stayed on have disproportionate rewards.
Thank you, Rod. I knew you had a few examples for us. Thank you. And Herman, I think you've got a few examples as well.
But let me contrast with a slightly more positive note, which is the telecom sector for IFC has been the most profitable sector historically up until 5 years ago. The equity returns from us being shareholders in the likes of Actel, MTN, our footprint in Latin America, etc., has been incredibly profitable. But all of these risks are what we deal with every day, and I think that we should talk as ways how can we support, right? Because we come with money, but more importantly, the governments are shareholders of ours, right? So we have a unique ability to tap into those governments and untangle some of those messes that are and by the way, we have mandates since 1956 in emerging markets, so we've seen everything. I've seen balance sheets in China where you don't have equity because the government owns everything, so it's basically assets and liabilities, right? Confiscation, civil war, right now we're helping one of the large OTTs getting their naira out of Nigeria, right? Because there's the imminent devaluation of 300%, right? So it is about helping through funding. It is about also through our access to the governments because they're shareholders, and it's also about engaging pre-bankability stage, which is something unique to IFC, where we help, for instance, pushing the tower sharing regime in Egypt, right? Which is something, or cloud infrastructure in Egypt, right? Which is where government has been very reluctant to go. So yes to the challenges, but also huge rewards if you stick to them.
And Claude, when you're advising your clients, are there markets you've either advised them not to go into or they haven't chosen to?
Thanks, Steve. Let me answer the question here in general terms, and then I'll give examples as well, as you requested. The challenges, three areas. First one is regulatory, and regulatory comes with two subparts, basically having the right policy framework for encouraging companies to set up their data centers there. And second one is on the FDI as well, so to bring the investments required for this capex heavy industry. Second one is the power, is the quality of the grid. We've heard from the previous panel about a lot of the investors have sometimes different funds, but anyway they're investing both in power generation, usually sustainable power, green power, as well as in data center, because many of those new markets don't have the power, the energy, basically to sustain the massive requirements in this industry. So that's the second one. And the third one, last but not least, is the connectivity. Connectivity is both the terrestrial connectivity within the country. Sometimes it's not at par with what's required. Sometimes it's not resilient enough, or it's very expensive, or it's the subsea connectivity. So, the data center industry as well as the submarine cable are deeply intertwined. So you can't have a data center if you don't have the submarine cable bringing the internet to that country and to that location. So there are some locations that have policies in place that don't, facilitate submarine cables coming in, cabotage, trying to support local shipping industry versus the hyperscalers who are building most of the submarine cables nowadays. They prefer to have complete control on how to maintain these cables. So just a couple of examples.
Thank you, Abid. Maybe to ask the question slightly more generous way for you, any countries you decided not to enter?
Not for the same reasons that Ronald had. I was thinking the biggest problem I have is not being able to get the vintage Bordeaux that we want for dinner. But no, I mean, if we, the big difference is in the way we invest, right? Our investor is our shareholder is Achcar, an insurance company, and they have a very different view of risk. And so, going to Warsaw, for example, was a very long business case because that was perceived as a really high risk market at that point in time. So, but the challenges are the same. They're political, they're economic. We have, you have tribes that you're dealing with. We have the mairie of the different communes and then the prefecture, and it's very political. And I think that one of the ways that we get over it is with local knowledge. But if we don't go into a country, it's just because of the economics of it. Again, this is a Europe. Claude and I were talking about this, right? The difference in Asia is that you've got a country like Indonesia with 300 million people, and it's just a sprawl of islands. So your market is a completely different one than looking at this huge landmass, which is Europe, which is predominantly economically and politically stable. And so we're looking more now at these kind of the smaller cities within markets that we're in. So Marseille, Rome, Barcelona, and we've entered Rome, as a market. But again, the risks aren't quite commensurate with what Ronald's doing. So I feel a bit silly talking about it.
You've outdone Ronald. Yes. Examples. I will open the floor to questions in a moment, but let me just ask a couple of specific questions to our panellists. First off, perhaps if I start with Herman. Clearly, environmental sustainability factors are critical these days, but Herman, when you're looking at a new investment location, does it absolutely have to fulfill those environmental characteristics and have an extremely strong green story for you to even invest in it these days?
Yes, absolutely. We cannot, by 2025, 100% of IFC's investments need to be climate tag, and by that I mean essentially they don't need to add, they don't have to add to the problem. And by 2030, 100% of IFC's investments need to be reducing to the problem. So it's all about taking greenhouse gases emissions, like Bosa that I mentioned earlier. It's going to net off 2 million cubic tons of greenhouse gas emissions a year. And also the mitigation plans, because we recognize every single investment that we're doing in the telecom space right now need to consider the fact that floods, earthquakes, and climate change will happen. So we bring our engineers to assess exactly how this will impact terrestrial, marine, infrastructure, broadband, data center, etc. So yes, in short.
And Ronald, so you've obviously got some quite fundamental challenges in some markets. I mean, how important are the green sustainability factors?
For us or for the data center customers? Or for us, it's very important. And the good thing is that sustainability has actually been an operational cost saver for us, because we've, for example, put solar on all of our rooftops in the Middle East and Africa, and we've seen power savings of 35 to 50%. Now we've launched the first IFC edge advanced building in the Middle East and in North Africa. Right? A lot of our tenants on the logistics front say it's important, but aren't yet willing to pay a premium for a green building yet. So they've been waiting for that to happen. On the data center front, because we have a portfolio of data center campuses that we're rolling out across the Middle East and Africa, there it becomes a discussion point. And for some, it's actually a very important discussion point, especially when engaging with governments. One of the hyperscalers managed to get a government in the Middle East to invest in a 100 megawatt solar farm, right? And there will be more of those investments, So I think it's coming. And yeah, so I think it's coming, and across all the conversations that we're having, it is important, and the governments are also trying to weigh in and help with it, especially in the Middle East, where I'd say they have more capital as governments to be able to intervene there.
Okay, so Claude, you're looking quite relaxed there, so I'll ask you a different question, if I may. We've talked a lot about some of the drivers for new locations, and I think one thing we haven't particularly mentioned is the hyperscalers. I mean, when you look at new locations, how important is it that the hyperscalers are either there today or are going to be there in the very near future?
Right, that's a good question, Steve. The hyperscalers have started, and by deploying basically their cloud post in what we call today hubs. Not surprisingly, they've become more and more bigger hubs because of the hyperscalers. So these are your traditional tier 1 countries. Today they're deploying more and more cloud zones and outposts and so forth in more and more of the tier 2 and tier 3 markets. So that's driving, they're changing their architectures, basically being much more distributed. And definitely that's a trend that's going to accelerate, as it's not going to plateau. So we see more diversification going because of the hyperscalers.
And Adam, in terms of preempting or following the hyperscalers?
Yeah, I think you've got to tie the two together, right? It's the sustainability, the renewable energy piece, and the hyperscale ecosystems. Claude and I had a chat before this conference, and we were talking about push-pull factors in demand. And so what you're seeing today is obviously a lot of saturated markets like Frankfurt, Amsterdam, Dublin, saturated in terms of power, saturated in terms of available land in key areas. So that's pushing demand out. And then other things that are pulling demand into new markets. We're seeing deals being done in the Nordics where there is an abundance of renewable energy. And even in Southern Europe, which historically has not been a place to put agnostic workloads, is because there's power available, you're seeing a pull into that market. Now what's going to happen is that your workloads are changing as well, right? We're seeing a shift into a new phase of AI workload, which has different technical requirements, and so we're going to see countries and markets chasing hyperscalers because effectively they create demand, right? That create those ecosystems that I was talking about earlier, and they're going to be chasing more renewable and sustainable solutions in the longer term, but in the shorter term, they're just going to go where the power is. So, you know, the answer is yes, we are all following the hyperscalers, but we're trying to be ahead of the game as well and seeing where can we build those, where can we get the PPAs, where can we get the longer term sustainable solutions, because, you know, sustainability is a word we hear and we use all the time. The way we're building now, it just isn't sustainable. We can't keep building, we're just going to run out of resource. So it's essential for the survival of, you know, of the industry and then the wider planet, obviously, for us to keep making those longer term solutions and trying to anticipate where that workload is going to go, both even geographically, but also in terms of, you know, technically and technologically.
May I add to this?
Yes, please.
Yeah, I'll tell you. I just want to, first of all, on hyperscalers, I don't know if you've noticed about a week ago or so, Larry Ellison said Oracle now has learned from what the other hyperscalers have done, which mainly means Amazon, Google, and Microsoft, and they know how to beat them now. And he said, his words, we will be in every country in the world. So very, very, very distributed, as opposed to how the other hyperscalers started being centralized. I just want to add an example here to the push and pull that Adam was talking about. The best example to that is really Singapore. Singapore is on the moratorium since 2019. Technically, they've lifted it late last year, but it's all terms and purposes that they're still on the moratorium. There is no magic solutions all of a sudden to the shortage of land and most importantly, shortage of power there. So that's the push out of Singapore. There's no power. So, and at the same time, you have a pull in from the neighbors of Singapore. They're saying, okay, great, they're sensing an opportunity. So they're lining up all their governments, their various ministries involved to facilitate foreign direct investment into areas surrounding Singapore. Like Indonesia, it's Batam. In Malaysia, it is Johor Bahru. And if you just see at the announcements of data centers, it's not true what we heard from the previous panel that Indonesia, the big players are not there. Every one of them is there. I mean, you know, in the past 6 months, there's been, you know, a quantum leap of announced data center capacity in these countries that all of them, really, the tier 2 countries, if you talk about Thailand, Vietnam, Malaysia, Philippines, etc., they're still all in the double-digit installed capacity. But you have several hundreds of megawatt of capacity which has been announced just literally in the past 6 to 9 months.
Thank you, Claude. I've offered the chance for questions, so do we have any in the audience at all, please? Please put your hand up. No, I can't see any lights. Okay, let me do come back. Oh, wait, sorry, I have a question right at the back now.
How does data sovereignty affect a new location?
Okay, data sovereignty. Who would like to take that? Data sovereignty effect.
I'll take that very quickly because I just spoke. I'll give you the best example, India. I'm giving you examples from Asia because, you know, I'm based in Hong Kong. India, just 3-4 years ago, had 500 megawatt in the whole country, right? India's been in the news lately for being the most populous country, 1.4 billion people, 500 megawatt. Today, you have a single campus being planned in India of about 3 to 400 megawatt, let's say. Why? Main reason is data residency. The government imposed that data from now on, a few years ago, has got to stay. So you've got no more starking example than what's happening in India.
No, but quick add? No?
Yes, it is a very important consideration, and I think politicians are picking up on the topic because it just resonates good. They're associated to sovereignty in general. So we're actually pushing governments to think in a different direction. What is most efficient? How can you safeguard your data without having a data center next door? Because in many cases, if you think about about the hyperscalers, they will not go to a country like Togo, right? There is no scale for that. But the country needs cloud infrastructure, so we're pushing in the direction of think about regional hubs that you can develop. Think about adapting sovereignty so that you actually do this in a smart way. Facility next door doesn't mean that you have sovereignty on data necessarily. It means how that data is trafficked. So there is a lot of capacity building that needs to be done with governments to understand exactly what they're looking for. But it is a serious concern.
Thank you.
Yeah, certainly in Europe, I mean, it's been the kickstarter of every major data center market, right? It's if you think back, 8-10 years ago, did we ever really believe that Paris and Milan and Madrid would be the huge hubs that they've been, or that Athens would eventually be a data center location? That's driven initially by sovereignty, by data sovereignty, because governments don't want their politically, economically, it just doesn't make sense for them to be hosting data outside. But then once the ecosystem is there and it's being constructed, other factors will play in and will pull in that demand. And so, what you're seeing right now is you're seeing workload across Europe being a lot more analysis around workload. Does this workload need to be in Frankfurt, or can this workload be somewhere else? Because we have this sovereign demand for Germany that needs to be in Frankfurt, but if we can't put it there because we're hosting, because of other reasons, we're hosting too much information in that market, we're seeing workload being non-German specific workload being pushed out to make space for the data that requires that data sovereignty to remain in Germany, for example.
Thank you, Adam. So we're on our final 3 minutes. Do we have a question at the back there?
Real quick question. First of all, thanks, Val. I thought it was a really interesting discussion there. Tom Wallage, new locations. It sounds like investors and operators are still following a single strand strategy. That's demand from really quite a few companies out there, not a mass market, it's a few select companies. For the last 9-10 months, I've seen some models being trained, 5 different models, multifaceted, machine learning, multifactorial, with sort of efficacy rates of 95% on predicting instead of reacting to a market, but predicting where the next market is going to be on a global basis. What is the panel's view on that idea of, instead of chasing a single strand of demand creation by the cloud providers, actually using some of that wonderful machine learning, artificial intelligence we're all hearing so much about these days? Question.
So,
Ronald?
So, interesting examples of governments creating demand. Bahrain, for example, how do they create demand? They put 85% of government data on the cloud. Saudi Arabia, how will they get to 1.3 gigawatts? They will have to create some demand. And given the governance of the country, if they take that decision, then all the ministries will move that data to the cloud, right? Same with countries like Egypt and stuff. So there will be other demand creators. The interesting thing also is, I'd say that we see 4 types of people building data centers across the Middle East and Africa. They're the cloud hyperscalers, the second is the international operators, the third is the regional operators, and the fourth is the MNOs and telcos. Now the last 2 categories are interesting because sometimes they have government objectives to build data centers. If you look at some of the data center operators in the Middle East and where they're building and where they're taking a risk, it's the political objectives are pretty important there.
Yeah, I'll just add very quickly on the subject of government here. Leading by example, indeed, is a very big thing. So government not just playing a role in data residency, but also by moving all its IT to the cloud. Okay. And we see that very often happening.
I do love the idea that AI will predict where AI is going to go. That is the serpent eating its tail, right? I'm with you, Tom. I want that to happen.
Congratulations, by the way.
We have 30 seconds left, so I'll ask a final question to the panel, and all we need is a number from them. So we've all talked about all these new developments and edge data centers. Adam, you talked about Marseille and Rome. If we look at a country like France or Germany, how many data center hubs do you think we'll have in 5 years' time?
2.
Claude?
You mean clusters within the country? depending on the geography of the country, France probably, I don't know, really. The trend is to have more rather than less, so I would say half a dozen each.
Thank you. Ronald?
Across 54 countries in Africa and half a dozen countries in the Middle East. I hope there's a lot, because listen, I mean, if people don't have digital infrastructure, they don't have opportunity. If they don't have opportunity, then that's not a good thing, right? Because they'll get on boats and come to Europe, or they'll show up in Mexico, right? So I hope for the sake of the entire world that there's lots.
Thank you.
We don't invest in those countries.
No. Oh, well, there we are. Okay, thank you to our panelists.